Hello, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. This is where you get everything you need to know in 90 seconds at 9 o'clock. Well, the news is that the US Fed is happy with its current policy settings, but the equity markets are disappointed with the news. That means there will be no new quantitative easing on the immediate horizon. The Dow is falling sharply on the news, bonds are rallying, and the currency and commodity markets are reacting in a major way. The US dollar is up sharply. The Kiwi now buys only 81.7 US cents, down from 82.5 overnight. The US dollar is up sharply against almost all other currencies as well, and apart from the continuing rise against the Aussie, our currency is fairly stable versus most other currencies. Gold fell a full $30 US an ounce, losing all its gains in US dollars since mid-March. Oil is weaker too. These reactions to the release of the US Fed minutes have only happened in the past hour or so we'll see whether they last. Remember, markets tend to overreact in the short term. There was also central bank news from Australia yesterday. The RBA held its rate, but signalled that a cut is in the offing, perhaps as early as the first week in May. They're also clearly concerned about the slowdown in their economy. And finally this morning, the New Zealand Herald is leading with a cautionary tale about the consequences of getting overextended with your mortgage. Yes, the bank can sell you up, but that does not necessarily mean your liabilities get settled at the same time. There is no jingle mail in New Zealand. Even after the bank sells your properties, you may still owe for any shortfall, and this can be substantial if your properties aren't sold for enough to cover the mortgage. I know we bang on a lot here about affordability, but affordability is a crucial criteria. There is no get-out-of-jail card with unaffordable home loans. I'm David Chaston, and that was 90 at 9, brought to you by interest.co.nz.